In this story, you're going to hear about a buy-sell transaction that almost cratered because the seller's accounting was not compliant with standard practices. The buyer and the bank wanted to walk away from what otherwise was a good company. And that's where the award-winning business broker, Stephen Beal, did what the best brokers do best: help the parties achieve a worthwhile deal. Listen to the story to see how he did it and the glue that enables deal making. I'm Ted Leverette, broadcasting from partneroncall.com. I'm the original business buyer advocate. For more than 30 years, I've been helping people find and buy the right businesses the right way, and then helping them grow their company using mergers and acquisitions. Along the way, I've interacted with and learned from some of the best deal makers worldwide. Okay, Stephen Beal, what's the glue that bonds people together during deal making?
With trust and credibility on both sides, you can get deals done. That's what I bring to the table.
So, Stephen, the other day we were talking about deals that go sideways and how it's your job to find workarounds. And you said something about snatching victory out of the jaws of defeat. You have a story about that?
Yes, Ted, I do. Thank you for that. I was working with the business owner. He had a solid business in the home renovation and construction space. He was looking to retire. So we marketed it. We found a good buyer who had a background in that space, and we negotiated a fair deal for all sides. And of course, as often happens in the middle of due diligence, things start to unravel. Certain accounting irregularities came up. Nothing major, but just all of a sudden cast the business in a different light, and the bankers got nervous. They didn't want to lend as much money against this business. And so we had to basically renegotiate the deal. So we did that. We renegotiated the deal. It satisfied the buyer and the seller and the banks, and so everyone was happy with that. So I thought everything was set to close, and I was out of town for a weekend and heard late Friday from the buyer that he was walking away and the bank was ready to pull the plug as well. Now, I had a track record with the buyer. I had helped him earlier to sell his a previous business he had. So that relationship and that trust and credibility was there already. So I said, don't do anything. Wait till I'm back. I came back Sunday evening, met with him immediately and sat down. We walked through the numbers. He understood where they were coming from. I think at first he thought there was something shady going on with the accounting irregularities, and as he understood the story more completely, he realized that it did make sense, and it wasn't someone trying to pull a fast one, but it was a legitimate situation, that just the way they handled their bookkeeping. And I've run into both the buyer and the seller since that time, and both of them were happy with the process. I mean, obviously there's hiccups, but the buyer and the seller get along great now, and the seller even continues to work with the buyer in the office to assist in busy times. So what I find in businesses, that trust and credibility that I, as a broker, can establish with both the buyer and the seller goes a long way to helping ruffle or smooth over the rough spots in transactions like that.
Stephen, what could the owner have done, perhaps before the listing with you or even after the listing, to anticipate the issues that came up, cause there to be a stumble? What could have been done differently?
Well, one thing in particular that could have been done, he used the cheapest version of the accountant prepared statements you get, the notice to reader or compilation statements. And certainly at his level, he probably should have had review engagement, because it was a revenue recognition issue that came up, and just the way he recognized revenue, the way he recognized accounts receivable was not according to the official accounting rules. And for the way he ran his business, it really didn't matter. But of course, if you're looking to sell, if you tell your accountant that, accountant may advise you to get the next level up in terms of accounting statements that will have more credibility with the bank and with the buyer.
And was the bank holding up a red flag saying, we just need to see the accounting done according to the way it's supposed to be?
Both the bank and the buyer. I mean, the buyer has invested, I guess, but both parties were concerned when the accounting irregularities came out. Both parties were nervous. But once they're explained and sort of, okay, this is the impact, and again, we did have to adjust the price somewhat to reflect the fact that the revenue wasn't quite as high as the initial financial statement showed. But once the updated financial statements were there, both parties were satisfied with the numbers.
Was the buyer savvy enough on accounting to detect this on his own, or did he have some accounting advisory?
His accountant pointed it out.
And that's what added some credibility and enabled people to see the reality. And then you had a meeting of the minds and you got a done deal.
Yes. Both got what they wanted to get out of the transaction, but there were a number of tense moments in between.
Tense moments. Well, Stephen Beal, how can people get in touch with you?
Probably the best way is through our website, BealBusinessBrokers.ca, Winnipeg, Manitoba.
Hey, you. That's right, you. Have you been looking to buy an exciting and profitable business? Are you tired of searching, but only finding barriers that impede you from owning a wonderful business? Well, have we got some good news for you. You can find and buy the right business the right way. And you don't have to go it alone. For over 30 years, author and transaction advisor Ted Leverette, the original business buyer advocate, has been helping buyers worldwide achieve win-win done deals. Ted Leverette says, you can't buy it if you can't find it. You see, buying a business is all about search. Because if you can't find it, you can't buy it. It's about being best and first. First on the scene with sellers and being the seller's first choice and top of mind for brokers and sellers. And most importantly, avoiding buyer competition. What about having to compete with other buyers? Well, you have to outbid them, which is a good way to pay more than a business is worth. Searchers do better with a winning business buyer marketing plan, and that's where Ted Leverette comes in. He'll help you prepare a winning plan, and then he'll guide your actions so you can find and then buy the right business the right way. But searching is not enough. The reality is too many people buy the wrong business, or they buy the right business, but on the wrong terms. That's why, if you want to buy the right business the right way, it makes sense to have Ted Leverette, the original business buyer advocate, on your advisory team. And one of the best ways to know what the savviest searchers and buyers do is to read Ted Leverette's books, How to Prepare Yourself and Find the Right Business to Buy, and How to Buy the Right Business the Right Way. You can get them at his website, partneroncall.com. Don't chance it. Right now, go to partneroncall.com, get the books, and schedule a free and private telephone conversation with Ted Leverette.